A very good afternoon, one and all present over here. This is Bharat Subramanian from the Dhanka Maharaja University. Today we are going to discuss about money and banking. What is money? We will discuss in this. And what is banking? How money come into the power? And what are the systems? What is the barter system? What is the function of money? How money generates? What is money supply? These are the topics which we are going to discuss in this session. Let's start. Money and banking and finance. Learning goal, after today's lecture, you will be able to describe the consequence of the inflation and deflation, describe the functional types of money, describe the measurement of the money supply, explain how banks create money, describe the categories and functions of non-bank financial institutions, explain the concept of the factual burden and illustrate it with concerned examples. Let us start. Chapter outline. Now, these are the main outlines of the chapter. Number first, why money? What is money? The banking system, money and finance. Why money? Now let us discuss that why money is important in our life and what is money? Why money is there? Before money, we should know that our society is going to start. We can say that merge with the barter system. What is barter system? Barter system means give and take policy. For example, I do wheat and I have rice, so I can do the interchange of the goods to satisfy my needs. It is known as the barter system. But there are so many drawbacks of the barter system. To solve the problem of the barter system or to conclude the problem of the barter system, the money has been introduced. Image, there was no money. Imagine that वहाँ पे कोई पैसा ना हो, would you need to barter? You will go for the barter system. If you want to get a certain goods which you don't have and want to exchange something else, you need to find someone who wants just the opposite exchange. Sometimes goods are not easily divisible. Imagine you want to get some eggs but have only a cow. So I have given an example of the wheat and rice. That if you want rice and you have the wheat, so you go for some other person who need the rice and who have the available for the wheat to interchange your goods to satisfy your basic needs. Now we will discuss that money and aggregate demand. Imagine you want to buy a house or make an investment but do not have the means to do so. You go to the bank and ask for a loan. If the bank gives you a loan, you will buy the house. If the bank does not give the loan or conditions are too harsh, you will walk away, not buy the house. According to this example, because if we have money, then we are able to satisfy our other basic needs. If I want to buy the car, but I don't have my financial position regarding the car, so I will go to the finance company or to the bank. What? For the loan, for the finance. If the bank available the finance for me, then I am able to buy the car. And if the finance is not available, then I am unable to buy the car. Hence, if the government can influence credit condition, it can influence aggregate demand. Some more basic thoughts about the money are this. However, is only true if inflation is low to moderate. Sometimes we know that our economy is underdeveloped, it is not developed. So inflation and inflation are the other part of the economy. Sometimes inflation comes, sometimes inflation comes. In the condition of the inflation, what happened? The cost of the things has grown high. So what are the drawbacks? The middle class person is unable to buy the goods according to his need because the price of the goods is so much high. In some cases, inflation becomes so high that the money is not generally accepted anymore. Sometimes the inflation is so much high, the person is not able, the money is not sufficient for it. For example, now you can see the condition of the Pakistan. What the condition of the Pakistan is going there? In the Pakistan, the rate of inflation is so much high, the person is not able to satisfy their basic needs, such as food, shelter, and clothes. Because there is so much inflation and the economies are going not in a correct position. In these cases, we provide export to the barter as money with loss value to the quickly. Barter, exchange of the goods, services or assets directly for the other goods, services or the assets without the use of the money. Without the use of the money, if you want to survive in the market or in the condition, then we have to follow the barter system. I have already explained that what is the barter system. Now let us why do the hyperinflation comes in from? Hyperinflation will happen if the government start using the printing press to pay for its expenditure because it does not manage to collect a sufficient revenue. If the economy is large and growing and there are not too many newly printed bills, the money usually is lost. However, if the government print too much money, there will be hyperinflation. If the printing of the money is too much high, then it will also bring about the condition of the hyperinflation. These are those definitions which I have explained according to the German 1920. This we have discussed about the barter system, hyperinflation, inflation, and deflation. Now comes forward. What is the danger of a hyperinflation in Europe today? No real danger. There is no so much side effect of hyperinflation. Government are not allowed to use the printing press to pay for their deficit. Even recently, every purchase of the government bonds by the ECP are limited. Now, what is the basically government is doing? What is the main objective of the government? The main objective of the government is for the online transaction. The government is saying that go for cashless economy, go for cashless money. After the demonetization which has happened a few years ago, what was the main objective of the demonetization? The main objective of the demonetization to curb the black money and to stop the terrorism. And one of the main objective of the demonetization is that people should go for cashless economy. So we have to promote the UPI, we have to promote the online transaction, and we have to promote many of the things which is related to the cashless economy. For example, Paytm, Google Pay, Phone Pay, Bharat Pay, they all are the examples of the online transaction. Why we are going for? We are going for the cashless economy. Money is modern developed economies come into the existence by the other means via banking system. And the UPI, the main goal is of the banking system. If the bank is not there, we are not able to use the UPI because UPI number is linked with account number, and account is always managed by the banks. Banks are the only institutions which operate the accounts, and the numbers always linked with the UPI. Now, why is inflation dislike even if it is lower? Or if we ask the common man that do you like inflation and the position of deflation, that the common person say that we like deflation, but the common person did not know what are the feedback or what are the drawback of the deflation. It restricts from the enters to the debtors. It might wipe out savings. It makes planning difficult. It hurts those with nominally fixed income, people or unemployed, assistant pensioners, etc. For example, what will happen? The demand is too much low and the production is so much high. This also cause the problem of the deflation. If the inflation is there, if the demand is too much low, it means people are not able to earn. That's why they are not want to. We can say that buy the goods. If they don't want to buy the goods, the demand of the goods will decrease and the amount will also the goods will decrease, because we know that there is inverse relationship between demand and supply of the commodity. It creates many costs. Why about falling price do the bring problems as well? What about falling price? If the we can say that if the price of the some goods fall down, then what problem it may cause? Deflation, when aggregate price level falls, wealth is redistributed from the debtors to creditors. Debtors tend to those who spend more funds are usually debtors. This might lead to the bankruptcies and problems in the banking sector. People might be postponed spending. There might thus be problems of aggregate demand. If the investor is not there in our country, what will happen? There is so much the problem of the employment opportunity. The investment, if the investor did not like to invest in our country, then what will happen? There is less production. If the production is less, then there is no demand. When the demand will become high, and the production is so much less, this may also cause the problem of inflation. There are some causes which affect the problem of inflation also. Then there are some causes which affect the problem of deflation also. No so much inflation is good for the country, and no so much deflation is also good for the country. What is money? Now we will discuss that what is money. We usually define money by its function. There is no particular definition of the money. We can only define the money by its particular function. पैसा सब कुछ भी और कुछ भी नहीं है. Clears that. And for money, we can say that we can solve our many problems, or we can satisfy our basic needs. And for the money, we can some things which we cannot buy with the help of the money. Medium of exchange promotes economic efficiency by minimizing time spent in accessing the goods and services. Must be widely accepted, must be divisible, must be easy to carry, must not detected quickly. Store of the value used to save purchasing power, must liquid of all the actions, but laws also vary in the deflation. What is money? Money is a medium of exchange. I want 10 kg sugar and I will go to the shopkeeper and I say that please give me 10 kg sugar. He will take money 440 will give me the sugar. So what is money? It is the medium of exchange. If I have money, then I can buy everything. Or related to the assets, I can buy many things with the help of the money because it is universally accepted. Unit of account used to measure the value in the economy. With the help of money, we can use the value of measures. Now, what is not money? A lot of things might be everyday life or money. It is not money in the eyes of the economists. Something you see, but according to economists, it is not a money. That is income. If someone has a high income, he earns a lot of money. You would call this income, not the money. Correct? I said that my income is 20 lakh per year, per annum, but it's not a money, it is my income. You cannot be term, you cannot be said that it is the money, it is the income. Well, if someone has a lot of stock or bonds, he does not have money in the economic meaning of the terms. Types of money. Now we will discuss that how many types of money are there. Commodity money, some things that contain interest, value, and is used to exchange. Coins made of the gold or the silver, sometimes cigarettes developed into a medium of exchange in the hard times. We have seen the coins, we have seen the notes, we have all other types of the money. Plastic money is also there. Now we are seeing that our economy is going for the cashless transactions. To be used, money, a commodity must be generally acceptable, standardized, durable, portable, scarce, and perfectly easily divisible. The system of gold-backed currencies, gold and silver coins is inconvenient to carry around in a large quantities. Paper monies were issued representing real and actual commodities. In India, only RBI have the power to issue the money. And before 5 rupees coin, it has been issued by the Ministry of Finance. Starting in the late 1830, most European countries had a national currency by the law of backed by gold. There are different countries have different currencies. Like India have the currency rupees, America is following the dollar, and different countries have the different currencies. Exchange rate between the different currencies was computed from their representative value related to the gold, and international transactions were finally settled into the gold reserve. All of international transactions are always take place with the gold. System of gold-backed currencies broke down with the start of the World War I. What is the basic value of the coins and euro banknotes we use today? The basic value is prescriptively and no more than the expectation that the euro bill will be acceptable in the exchange. Fiat money, a euro bill is money because the government declares it to be money. Fiat money poses exchange of the value. The value of the goods or services that such money can pay for in the market. Now, you are likely to make money via your own transaction by the other means. Types of money which is purely based on a promise to pay by someone other than central bank is also called a credit money. And I have already said in India, only central bank, this RBI, Reserve Bank of India, have the authority to issue the money. They can only decide the CRR of the banking system. CRR here means cash reserve ratio. They are in the further section we will also discuss about the functions of RBI. Your deposit in a checking account, now we will understand that the liquidity continuum. Liquidity continuum, more liquid, less liquid. Currency, share stock, real estate. Checking account, precious account. Do you use money if you use a credit card to make a purchase? No. If I went to the shopping mall, I am taking the loan from the bank for some days as a credit card. Credit card means there is some part of the loan which is given by the bank to me, and I can use the money for 50 days, 55 days for the purchase of the goods, and before that I have to return that money. If I did not return money before the particular time, then I have to pay the penalty on it. We can also say penalty, we can also say interest. One is taking out a temporary loan from the credit card company. I have already said that credit card means the type of the loan. Only one day a month when you send a check or electronic transfer to your credit card company from your checking account, you make a money transactions. Bank deposit and money. Bank deposit fulfill the criteria for the money, store the value, widely accept the payment, unit of account, but deposit have a different degree of liquidity. Not all can be used for the payment. What do we count as money? Pragmatic solution. Different monetary aggregate with intuitive bank deposit with different kinds of the maturities is used in the terms of the money. Now, monetary aggregate, the example of the European area values are cash in circulation, overnight deposits. These are the things of that. Now this is about the banking system. What is banking system? Banking system means, now we will discuss that what is bank. The bank is a place where we deposit our savings and we can borrow the loan. It is called as the bank, or we can say that it is a financial institution. Bank reserve. Funds are loaned out by private banks but are kept as a value cash or a deposit at the central bank. In most countries, banks are required to keep some of the shares of their deposit at reserve, which is called the required reserves. How a commercial bank earns profit? Government bonds earn interest by lending the money to the national government, relatively safe and liquid portfolio of the loans. Funds that are owned to the bank by a business, household, non-profit, or non-federal level of the government. Less liquid than the government bonds. Major assets and major way to make the earning. Now we will discuss that how many types of the banks are there. Retail banks, saving banks, cooperative banks, private banks, investment bank, unmunicipal banks, central banks. Bank and their activities have been and still are heavily regulated. Rules about minimum reserve capital requirement, qualification of the management after WWII, binding ceiling for interest rate on deposit and loan, USA Banking Act, Glass-Steagall Act 1933, separation of commercial and investment banking, waiver deregulation in the 1990, re-regulation after the financial and economic crisis 2008 and 9. When a commercial bank decided to make it credit the amount to the checking account with the store of a key deposit money is created, this increase M1, hence commercial bank can create money. The central bank and commercial bank money creation in the Euro area and the other distribution, commercial banks are required to hold a certain share of their deposits and reserves. Bank need to borrow these reserves from the bank, from ECB. These reserves do not need to be available at the time when a deposit or a loan is made, but have put into the account within a certain time. If commercial bank need cash, they have to borrow it from the ECB. Sometimes what happens, if for example there are two commercial banks, PNB and SBI, if the PNB some loan from the, they don't have the cash, they don't have the minimum cash for their reserves, so they can take from the another commercial bank like SBI or other Bank of Baroda. But for that they have to pay the interest day by day. Central banks, commercial bank A, commercial bank B borrows. Central bank is the father of all the banks. All the banks who are there in the country, they have to follow the rules and regulation which has been made by the central bank. In India, RBI is the central bank. Commercial bank holds certain shares or deposit central bank reserve requirement. Bank A, B borrow reserve from B to A. Sometimes if commercial bank B need money, then it can ask from A. If A need money, then it can ask from B. Or bank A be borrowing from the central bank and gives a collateral and interest rate. Sometimes bank has to also do for the collateral security for that. CB provide cash. Commercial bank provide collateral and pay interest. Commercial bank provide cash. Okay, now we have discussed about the banking system, we discussed about the money. Now in our next session, we will discuss about the money and finance. Till now, best of luck. Thank you.